Righto, money miners, another bloody wealth of knowledge coming to you by Axis Mining Technology, the best friend of a geologist, the best friend of a driller, and JD, the trusted advisor in drill hole survey instrumentation.
The best friends of money mine as well, mate.
Oh, Jesus Christ, I love them too. Mate, we've got a very interesting character from Chicago on for this yarn. You'd say he's a bit of a mongrel mix, bit of a commodity trader, bit of an investor. Mate, Bentley Atteberry from Myst Capital, an absolute GC, has come on the show.
An all-round guru.
Yeah, mate. Everything bloody we're talking metal. We're talking copper. We're talking aluminium, tin, lithium, bit of nickel, bit of uranium at the end.
Couldn't forget the U.
Oh, couldn't. Yeah, I had to sneak that in there. PGMs as well, mate, and like real high level on the bloody you want to know about TCRC and refining charges for copper, mate? This is the one-stop shop.
Fascinating chat, and kind of like you say there, Myst Capital as well as Myst Trading. So it's a funky crossroads between commodity trader and investor in, you know, the natural resource world. He's got some colleagues that he works with that focus on other commodities, but he is all about the metals. Like you said, Matty, he spent a lot of time lately in China. He's got some, you know, inside knowledge that he wants to share with us from, you know, the lithium operations, the integration over there. He's taken positions in copper lately. So we talk about the really dramatic run-up that we saw, and then, you know, the short side of it in the last couple months. So yeah, it was a fascinating chat and a deep dive on someone who's clearly done a lot of work. He's posted some research on the company's website you can get into and read his takes and his words. So yeah, all these funky directions.
It's all go. Let's just rip in.
Let's do it.
Oh, righto, money miners. Here we go. We've got Bentley Atteberry from Myst Capital in Chicago. Boys, we engaged with Myst a while ago. We asked for the Scottie Pippen, but they've sent us the Michael Jordan of Myst Capital. The main man himself, number 23 in funds management. Cobber, welcome to the show.
That's just a hell of an introduction. I don't even know what to say to that, but
I told you I'd come up with something.
That was a great reference. I wasn't expecting that. That was good. That was good. Yeah, thanks for having me on, guys. It's a lot of fun. Been tuned into you guys, I don't know, maybe 6 months ago or something like that, and I found it really interesting.
Awesome.
I struggle to always find podcasts in the finance industry, just because a lot of times it tends to be people that are, you know, just talking heads on TV and stuff. They like to basically go on TV just to sound smart. And so you don't really get much out of it. And there's no personalities. So I get bored, I guess. So then found you guys.
Us too. That's why we started the podcast.
That was the foundation of the business, mate.
Smart.
We're like, fuck, there's no one on YouTube that just talks shit about the markets. Yeah, let's do that.
Now we just try to sound smart.
Yeah. Mate, we're going to rip in with, mate, we're talking metal today. Every type of frickin' metal on the planet. And, mate, these boys have got it mapped out sensationally. JD, where are we starting?
Yeah, I think we want to start with copper, right, JD?
I think we've got to. So you're at that awesome intersection, and, you know, copper's it's probably the most interesting place to start. Given what's happened in the past couple months, you've had the short squeeze up. You've got that real mixture of hedge funds getting involved, commodity traders, you know, the people more downstream, the smelters and refiners having a bit of a pinch on. So how has copper sort of played out versus your kind of expectations this year, Bentley?
Well, I guess you guys have probably seen the date on the piece I wrote. So it was painful there for a couple months, but it's you know, that shit happens. And ultimately it's played out. I guess, you know, we're fortunate to be recording this now and not a month and a half ago. So now I can essentially say it's played out pretty similar to what we've been expecting outside of that period between April and 2-3 weeks ago, maybe a month ago. And I was actually just reviewing some notes earlier too from a couple years back, and it was interesting. Had kind of a different situation where you had TC rates, the treatment charge rates, rising quite a bit, which typically signals, you know, just oversupply in the concentrate market. So I know you guys have brought it up a few times before, but just for anybody that doesn't remember, a treatment charge is what the smelters make to refine concentrate essentially in the metal. Sometimes it goes to blister first and then to refine cathode, but it's effectively their margin on it. And we saw how it was 21, 22, so 22 heading into early 23, I believe it was. You had PPC, so Pan Pacific Copper. They're one of the larger smelters out in Asia, Japan actually. And they had unexpected maintenance, and they ended up dumping a couple 100,000 tons of concentrate onto the market that hit China. Well, at the same time, all these smelters and refiners in China, including Tongwei, I believe, they were also slower to ramp up new projects. And that, fast forward, we'll get into that. It's kind of had an impact now. So you actually had TCs rise quite a bit and unexpectedly. And I was writing a note back then about how TC rates are rising, but that doesn't actually mean that copper is oversupplied right now in the metal. Fast forward to this year, and you had a little bit of essentially the exact opposite happen. If you look at demand data for refined copper cathode last year, you'll actually see that you'll look at it and it looks like China had somewhere between 5 and 7% increase in demand for copper cathode. And okay, anybody can, look, the green energy space has made up a big difference in terms of the lost demand from construction, like real estate and that sort of thing, and also late stage real estate picked up last year, like finishing. That's where copper comes in as well. But you're like, that just doesn't seem right. Something's not right here. So, for us, we look at that and we're like, okay, someone's holding the metal somewhere. And then you had Cobre Panama happen, which you guys are all familiar with. Positive news from them actually today. We can get in that later, but Cobre Panama happened towards the end of last year. So then you had it almost felt like a squeeze in the trader space that needed to secure material for 2024 at that point in terms of concentrate and or the traders were intentionally kind of squeezing the market. I don't know which. I won't necessarily conjecture too much on that. And so they were hoarding the concentrate, and looking at that a little bit, we're like, well, okay, that the metal is not in short supply at this point, but the concentrate clearly is, and there's a problem going on there. And you also had a combination of that in the refineries. So you have a lot of smelters and refiners coming online, still happening everywhere from what's Freeport's
Indonesia
project in Indonesia? I can't remember that. Not like not Grasberg, but their smelter project. They have that coming online this year. So,
PT, FT.
Mayer or something.
So yes, so they had so they were also holding on to extra concentrate at the same time, and they, recently the government's let them export it. That could be somewhere between 300,000-ish tons of concentrate possibly in the market or more now. And so you just kind of had this general squeeze in the concentrate markets, and that signal got picked up on by, let's just say, the financial side of the sector, and copper had been in a pretty tight range for several months, and it's been pretty dead. I mean, demand in manufacturing globally has been pretty weak, and that lines up with that. So you had a little bit of a breakout, technical signals, then you had the financials taking advantage of, the breakout and the squeeze. And it also caused an issue on the CME, which is a actually completely different issue. And that then just accelerated things. And so you had this period where, time spreads, prompt spreads blew out to record levels, not necessarily as a percentage, but, it was still nearing full carry on that sort of thing. And it just, all these signals were, okay, supply is not that, or demand is not that strong. And sometimes that can be frustrating if you're taking like speculative positions in the market, and it's all about the way you position that and being able to hold through such things. You never know how far it might go, but we've seen that definitely release a little bit here in the past several months. Now we're back down towards 9,000. So it's a little more of appropriate price level. Inventories are still high. Chinese inventories were at about near record levels at one point, I think. So the metal is starting to flow back and forth, but I don't know if you want me to go into a little bit the CME issue. That's a little bit.
It's kind of interesting, right? Because I think to a rookie just observing the copper market, you don't distinguish the difference between the concentrate market and the metal units or cathode market. And heck, the price kind of ran up, but based on a capacity dynamic with the smelters as opposed to the actual end product demand in that case. Is that a fair synopsis? Yeah.
Yeah, definitely. I think he has actually had a guy on him like a month or so ago. I was pointing that as well, and that's what it was. Yeah, it was kind of run away for the wrong reasons. And there's also, out of 26 to 27 million tons a year in cathode space, you still have about 4 million tons of that, 4.5 million tons that actually comes from recycled sources. So that's part of the forgotten space as well. But it's also now they're starting to actually be a little bit of a issue on the supply side for scrap that's happening right now as well. So we're kind of keeping an eye on that.
You're both a trader and a hedge fund, Bentley. So what were the financial players actually doing during the copper run up over the early part of the year?
So it was all over the place. So from the trader's perspective, we saw Trafi and IXM trying to cover positions by getting metal to the US. And in that in itself is very difficult because that CME contract tends to be the one that a lot of financial players use, but it's not a very representative contract of the market. In fact, it's very little. I mentioned in the notes that it is very reminiscent of the problem we had in nickel on the LME a few years back. We expect this sort of thing, by the way, to happen again in the near future for the similar reasons, just because demand in the United States for copper peaked in the 80s, effectively. It's only about 1.5 million tons a year here used of copper cathode, even less these days. I think it's about right for 23. Whereas at the start of the century, we were over 2 million tons, and it was 15% of global demand, and now it's more like 5%. And supply is the same story. It's been going downhill for quite some time, but typically inventories and trading gravitates towards where use is, so where demand is. And you just don't have that much warranted material that you can warrant onto the CME out there. It's you can't use any Chinese material, you can't use any Russian material. South American's okay. There's a lot of South American that actually clears customs tariff-free. So what we believe we saw Trafi and IXM doing, and I don't necessarily want to speak for what they're doing, but I'm just conjecture, is having to shift around materials. So they had to pull material probably out of South America or even here domestically, and then cover that with what you would do as a commodity trader. You'd have to cover something else. So you couldn't use Chinese material, but you could use Chinese material to cover what you need for other clients, while as you can shift maybe South American material up to the US. And they've been working to try to do that and get, deliver, just to take advantage of the price spread difference as well. And then, how the financial players get with the media and stuff. They're like, oh, price squeeze. And they all try to squeeze the markets, and they're just kind of,
there was so many like big names being like, copper's the trade of of my career and all this sort of stuff. Heaps of headlines like that. Is that the playbook in the US? You just kind of, ramp your thesis and then exit on the speculative like mania that comes from it?
I don't necessarily do that. So I don't know if I want to speak for others. We were being open about it. It's no secret if you kind of read some of our stuff where we were short, so we were not doing that. Hung out short did just fine, but you hear people do that, right? You had someone like Andrew Rand, no comments about it. He's very successful hedge fund in the commodity space, but he's known for his crude, right? He's a very, very well-known crude trader. Even though I got on his website and it's all about green energy and windmills. It's kind of funny. And he all of a sudden was like, "Oh, I'm out of the crude markets now. I'm only in copper and cocoa." And I'm like, "Oh, Jesus, all right."
Yeah, he did the same with cocoa.
It's like, oh no, which cocoa as a whole. You're betting on weather effectively at that point. So you get a lot of that. And then when it's not a deliverable, when there's not much product to be delivered, you have problems. And we actually see it in NYMEX crude as well. And that's part of the reason why that went to negative pricing. There's a lot of that went on as well in 2020. And you might see that as well, because NYMEX crude is a pretty specific, it's the same thing. It's got it's not really what, Midland WTI is not NYMEX crude, even though it's what it says it is. So, if the exchange doesn't do anything to fix it, you'll see this happen again.
With the copper on the LME, when you're talking about nickel before, nickel, you got, briquettes, the sulfate, like comes in all different forms. It all gets sort of priced the same. How does the copper one work? So if you got copper cathode, is there a copper rod market as well? Are there different products, or is copper cathode the end product?
Jeez. Maddie, how old are you?
Too young to not know.
No, I was making a joke because there was back in, oh my God, 70s, 80s or something like that. They tried a few different copper products on the LME, and they effectively found that the highest value, highest quality good survives. And they did have, I believe it was a rod product for a little while, but it just the cathode is what survived. So copper is just cathodes.
Yeah. Okay. That makes sense.
Yeah. Yep. And I believe the CME is the same thing. It's just the different brands that can be delivered in the different delivery types and locations, right? I mean, who's going to want or deliver material to a Phoenix, Arizona warehouse? Like that's a pain in the ass. That's expensive rail from probably West Coast port, unless you're Rio Tinto, as we were talking about earlier, someone like that. That's their free port, right? Well, yeah, sorry. Phoenix would obviously be free port. Odd to have a warehouse near their offices, but
Yeah. And how homogenous is copper cathode across the world? Is there different qualities of it? Does it vary much or not?
Yeah. No, there certainly are, but it's gotten to the point where it's one of the more commoditized commodities, as we like to say. We'll get into lithium stuff later, but commodities are really not commoditized. Crude oil is the same way. It's the largest one that there is, but it's pretty homogenous to the point. I mean, there are, and the equivalent grade cathodes do trade. They have their own discount, or I've never seen a premium, but they have their own discount to deliverable grades as well. Those went really deeply negative, actually, about a month ago in China, down in warehouses, because it's like, well, you can't even deliver these anywhere. So that's just for downstream customers. But they're still pretty, I don't know, they're fairly homogenous.
Yeah, right. Bentley, I'll tell you what, but I'll tell you something that's not homogenous like copper cathode. A mining services contract with MMS. That is complete polar opposite. That is, I'd say, fully heterogeneous. That is, mate, because holy snap and duck shit, they can craft an open pit mining contract agreement in any way, shape or form that just gets dirt moving.
You know what is homogenous in MMS contracts, Matty?
What's that, mate?
The bloody quality. Top tier quality, every contract they do.
Yeah. So it's probably the only thing in the world that is both homogenous and heterogeneous at the same time.
It's that weird spot in the Venn diagram, isn't it?
And that's, you have the ability to be like that when you're a turnkey solution.
Absolutely.
For mining services. So, mate, because I'll tell you where this is going in WA. If you pretty much, in the future, you will see any piece of broken rock being dug up, being hauled, being trucked to a bloody mill, you're going to know that MMS have done it. They are taking the industry by the balls and get in quick. Mineral mining services to move your open pit dirt and help you bloody finance your operation to get going.
That's it. Details in the show notes. Go MMS.
I didn't actually know they were that good till I said it like that.
One phone call.
Gee, one phone call. Right, back to it.
Bentley, to sort of wrap up on copper, I'd be interested to hear what are the features you think we're going to see and hear a lot about in the next few years, talking about, from a smelt and refining perspective, a production perspective, and a kind of markets perspective. What are the sort of stories perhaps that might be, more short squeezes or more disparities between markets, or more smelters and treatment charges coming down? What are the features you think are going to stand out?
Yeah, that's a good question. I would expect TC rates to they've recovered to low teens, 20-ish range, maybe hang out around there, 20s, 30s-ish. You'll still see fluctuations. It's not going to be a flat line, but and there's still a lot of refining and smelting capacity coming online in China. And a lot of metals are this way, where refining and smelting is not really a constraint in these markets. It's pretty quick to get these things fired up. I believe Tongling has like a 2 million ton per year smelter. They're still getting fired up. It's bloody massive, right? That's huge. So from that perspective, you might see, you want to stockpile material before you get it fired up. So you might see another similar situation to this. That will be in the headlines. I think there's some solid mining capacity coming online. So we had 24 that was fairly balanced / small surplus. Early 25, pretty similar. You're starting to like bet on macro at that point. So push it around, whatever it is. But after that, by late 25, a lot of big projects, but essentially once Oyu Tolgoi really gets full ramped up and stuff like that, now you're going to be starting to get actually constrained by concentrate and stuff. So more later half 25, 26. But freaking I get things wrong all the time. So there's
So do we, mate. Should we move to aluminium, guys? I think this is a super interesting one to talk about, and we probably know a lot less than we should, given there's quite a bit of bauxite mining and alumina refineries here in our own state in WA. But I'd love to hear your outlook. There's quite of varying opinions out there, from sort of bulls to people not so bullish, about where aluminium goes down the track. So kind of to start with, can you give us a lay of the land of how you see the broader aluminium market, and obviously alumina and bauxite kind of play into that?
Yeah. Ali is a super interesting metal. So it's got a hell of a history, whereas I can't think of anything else, any other metal that went through this. And it's not really modern, but let's just call it post-industrial revolution times, where when France held the World Fair in 1860s, 1850s, Napoleon actually put on display a bunch of like aluminium utensils. And if you were lucky enough, they're big enough dignitary, you got to use aluminium utensils. And to put it in perspective, back then, oh man, what was the equivalent price? It was something to the tune of nominally like $1 to $2 million per ton. And within a matter of a couple of years, God, I pronounce it wrong all the time, but the modern day aluminium smelting process came to fruition, and only took literally a couple of years. Two guys actually figured out pretty similar processes with Harl and Hello. I'm not a Mets or an engineer, so I won't go too much into that. But basically, within a matter of a couple of years, all of a sudden now it's $100 a ton, $50 a ton, or whatever it would have been back in those days. And today it is $2,300 a ton, right? So that aspect of it's pretty fascinating. And then it goes through its cycles like every other commodity, where sometimes it finds new reasons and new ways, new uses. And you had post World War II where you had heaps of the shit left over, especially in the UK. So that's why in the UK, a lot of the Jags and even original Range Rovers or Land Rovers, I believe, were actually built with alley, because it's like leftover alley, right? Whereas other places in the world, no one had it. So kind of fast forward, the bull thesis a lot of people do have is in the EV sector, because it is such a lighter material than steel, and considering how heavy these batteries are, you got to get the weight of the vehicle down, and that helps rolling resistance, which helps mileage and range and that sort of thing. So there's a lot of benefactors to it. Pretty easy to press. The alloys are where a lot of the technology you'll see come from. So it does get tough, where you'll see these numbers of like, all right, we're going from 100 kilograms per car or whatever, 150 kilograms per car. Well, all the way up to like 300. Maybe even, I think it's like 250, 300 kilograms per automobile now of Valley in the future. And it's like, well, okay, there's going to be some sort of adaptation with alloys. Now, with that said, it's used in solar as well. I can't remember the exact now. It's like a gigawatt hour is something like 17,000 tons. I'll double check that one, get back to you guys in a little bit on that. But so it's really big in that aspect. They tend to not use a ton of it in wind, even though you'd think those massive turbines. And I think it's has to do with tensile strength. But so the green energy space is where a lot of it comes from, and transmission lines. So when you have power lines underground, you tend not to use aluminium. You're more space constrained, right? So on a weight basis, Ali is actually more, what's the word I'm looking for? A better conductor of electricity than copper is on a per weight basis. It just takes up more space. So the other benefit of that when you're hanging big transmission lines is you can actually space out your towers further apart because they weigh less. So that then saves on that cost as well. And that's where we're seeing a lot of demand increases for it, especially as, new energy requires new power grids essentially, and you're transferring electricity from further distances. So you need more of the ship. So that's where a lot of the bull case comes from. The demand from it, that kind of the new energy space is, and in all honesty, I agree with that. It's how much of it's going to come from recycled sources, which someone like Harbor Aluminium, that guy's hell bent on, recycled is going to take over, but recycle can only replace what's already been produced. You can't really grow, right? And then now you have the supply capacity strains of China, which is the largest producer of aluminium in the world. Their capacity is basically 45 million tons, and that's actually government set, and it's a 71 million ton a year market. So we're bumping up against that right now, and it's uses a lot of electricity, and that's where I think a lot of these bull narratives come from. Research houses or sell side, us included. I can see that as well, but price determines things a lot of times. So the higher something gets in price, the more like we are to find a substitute. But as of right now, at current prices, I see that story. I believe it. It looks like you want to talk, Trev.
Oh, sorry, mate. No, I was just taking it all in, to be honest. But one of the comments that was made to us recently was the entire complex is a lot more fragile as well. There's been some kind of down in the entire complex some supply curtailments here and there. Some in Western Australia themselves with Kwinana. You've got issues in Queensland with Gladstone. And then you're looking into China, and there's been even some depletion over there, and they're going to Guinea for the bauxite. Would you agree with that sentiment that the entire kind of complex is fragile, and heck, if you had some sort of disruption, it might have a much larger impact on the price than it would have had in prior years?
Certainly. I think I actually had to look up the bauxite price chart recently because I hadn't looked at it in a while, and I didn't realize where it was at. It was $75 a ton. So I was pretty impressed on that. But it does have to do with, so you had Indonesia, I think you guys mentioned the other day, where they put in similar constraints as they have in all their other industries, just value add, right? So they no longer can export bauxite into China. And one of the problems with that actually is just the metallurgy and the chemistry involved in alumina refinery is if anybody doesn't know, about 2 tons of bauxite goes into 1 ton of alumina, and about 1.9 tons of met grade alumina goes into 1 ton of aluminium.
Oh, that's a good one to know.
Yeah,
I'll be quoting that flat out, like it's my own idea after this.
Okay, that's good to know. And then don't get as a commodity trader, we've had it come up before where somebody's tried to been pushing us like white fused alumina, which is a completely different thing. It's actually a lot higher value, but there's a different use between alumina for metallurgy than there is for like refractory stuff. So you got to be a little careful there as well. But most of what you would read about or talk about would be the met grade alumina, and that's like that FOB Aussie price. That's met grade. Look, pretty dependent on Guinea. That's been one of the transformations, as well as accepting Australian bauxite. And now that you have these issues with the natural gas pipelines and Kwinana, I think there's a Kwinana refiner as well that's struggling.
Yeah,
out there, right? That prices spiked 500 plus. It's about 30% of your cost as an aluminium smelter is your alumina input. So it matters. We saw prices in China spike. We've seen them not only have imports increase, but also exports. I think I mentioned that the other day where it's one of the Aussie, I think the one with the Rio. So the Rio alumina refinery down there was a JV with Rusal. And in April or March of 22, the Australian government was like, nope, no more, right? So Rusal then had to find other means to get their alumina. And so now they get it from China. So China actually exports as well as needing to import. So it's kind of an interesting dynamic there. And Russia is an important, that's what, 6-7% of global aluminium production comes from Russia. So it's pretty significant.
Bentley, you spoke about substitution and price obviously driving that before. And I remember reading a Bloomberg article maybe a month or so ago talking about the biggest copper buyer in the world, the China, I think it's called State Grid Corp, started to really rotate their copper buying and, put their copper buying kind of on hold and started buying a lot of Ali as a substitute as copper kicked up to whatever it got to, over $11,000 a tonne. How does that kind of play into your thinking, in terms of copper and where that price goes and Ali's demand in the future?
Long term, I don't think I think that's just, they do very seasonal purchases, tend not to be hanging new UHV lines here in the middle of the summertime out there, whether it be from, depending on geography, either monsoon season or just, I don't know, freaking hot. So they will load up purchases for the fall. And excuse me, I know the article you're referencing as well, but that's very much just getting their inputs in line and being like, okay, well, we'll do our Ali input purchases here because of where prices are, but we're going to hold off on copper, sort of thing. It's not a really, the use cases for both of those where they're used in electricity transmission is different. It's not as replaceable as it seems. Construction here in the 50s and 60s tried to make it replaceable, and you ended up in a lot of building fires. So at the transformer and those sorts of points of contact, you want copper. You don't want aluminium. So a lot of times, you have the big transmission lines that will be Ali, and then when they get to the transformers, they end up using copper. So that's one aspect to that. I did read about some auto manufacturer trying to use Ali to lighten the weight in their car. I don't see that would work. That takes up more space, and that, especially with the battery EV, the last thing you want in one of those things is a fire. So I'm not sold on that part of it yet either. But hey, if prices ever get too out of control, I guess you just use silver. But that's we're a long ass way from that.
It might be a while down the track.
Yeah, it's funny drawing like parallels to like aluminium for in terms of conductivity in relation to it being cheaper and better, but it just takes up more space. It's actually a metaphor for GetWet bladders. I think.
Is. Yeah, you're dead right. So
exactly the same.
Bentley was talking about these massive breakthroughs that, society, the world had with the Bayer process and the Hall's Herald process, where aluminium just got that much cheaper. And I think of GetWet pretty similar, Matty. The breakthrough the world has had with these bladders is second to none. They've just changed the way mining is done. They've changed the way you can manage water at your mine sites. Look no further.
You haven't got the constraints of it like an EV where you got space restrictions. Like aluminium sounds like it would be the better option, but there's a space restriction. GetWet bladders, they're in the desert, mate. That's as much bloody just bloody flatten out a massive pad, chuck a GetWet bladder in, avoid the concrete foundations required for a hard-sided tank, and mate, you can store water, you can get rid of water into it, you can get water from A to B. Mate, they do the piping, they do the infrastructure setup to go in, out, and anywhere from a GetWet bladder.
And that's it. You can roll it up and move it when you want to, you get to that point in time. You haven't even mentioned the guarantee, Matty. These things last forever.
And I think what, they got a 10-year warranty, but they last for easily 20 years and probably 30. So the 10-year warranty's getting that. You're pretty much getting half price effectively. Like, what a generous offer. So, mate, GetWet bladders just save the mining industry by saving your water.
Give Matt.hall a call.
Good on you, Matt.hall.
GetWet.
Metal that's close to my heart, mate. Tin. You've had some involvement with this metal over time. Where are you at? Oh, you holding some now? Look at that.
We've got a Baron here.
I don't know. I don't even know why it was a random gift, but I remember brother-in-law was asking, what do you want as a gift for Christmas? I don't care, right? It's not really my thing. I'm kind of the Grinch in a little bit, but I was like, oh, it'd be kind of cool. I can tin or whatever. And he's like, that was the weirdest Christmas gift I've ever bought, was somebody a tin ingot. I just thought, so that's unique, I guess. But yeah, it's look, I am not a baron. I'm not too familiar with those guys. I know you guys have brought them up before, but what are they, like? Just like Cornwall old family? Like who?
the king of tin is. I think he's from. Well, he's got an English accent, so I'm just saying he's from Cornwall.
Yeah,
he probably isn't.
The barons are a Twitter community, that's for sure. I don't know where they're from. Probably all over the place. But yeah, you're not a baron. Of course, you're a trader, you're a mercenary. But what's like, you know, you'd obviously still be following the supply demand dynamics there. I think it's in the it's 30,000 US a ton now, so it's come off quite a way from 35, like just a couple of months ago. How are you watching that market? I mean, at one point it had kind of similar dynamics with the smelting constraints and everything to copper too.
Ooh, yeah. Pretty closely, actually. So we're involved a little bit in both sides. It's been, you know, when people used to ask me as a fund manager a few years back, you know, okay, what's your favorite metal for the energy transition? I always said tin, always did. And I still believe in it, actually. Part of it was to be a little more contrarian to being like, oh, copper. But, you know, look, copper is, that is as well. But, you know, tin's got that constraint of, it's not really mined as a byproduct of anything. It is a lot of ASM, and the technology to get, one of the things that's held demand somewhat constant, I guess, for the past, I don't know, 10 or 15 years, fairly constant in relative to other metals, is you had kind of the miniaturization, right? You had Moore's law, and you also had just like, okay, how do we use as little bit of tin as possible? Because it's the glue in electronics, essentially. And you also, like tinnies are not really a thing anymore other than a term. That's a lot of aluminium that's replaced that, but that's been going on decades ago, really, realistically. And then now solar too. So tin paste is used in solar. It's pretty significant use there as well. But yeah, I've always thought of it that way. And you got the far upstream constraints of the WA state, which came out of nowhere, essentially almost a decade ago now, or 8 years ago. And then one thing I will point out about the WA state is you got to bear in mind that part of Myanmar is native Chinese speaking. So kids there go to school in Chinese. They all speak Chinese, and they do have really close relationships with Yunnan, as they share a border. Well, for part of it, it's actually it's like a cutout part that's not part of the WA state, but not to be mixed up with WA, Western Australia. That'd be, unless you guys have military leadership as well. I'm not aware of. So we haven't seen. So they had stockpiles of that flowed through the border. That kind of kept Yunnan tin and stuff alive. Metals X also, Tasmania, them increasing production nicely has helped them as well. But we just saw, it was interesting because, electronics demand hasn't been great. Chip demand hasn't been, the last quarter or so, it's really picked up, but the numbers we look at, it's basically picked up to get back to 2021, 2022 levels rather than new highs. Yeah. So a lot of inventory did show up in China and in the LME over the past, let's call it 9 months. And so you saw a little bit of a similar kind of, I don't want to call it a squeeze in LME tin prices, but it was partially spec driven that like the metal's there and it wasn't really in short supply at that time. The Chinese didn't want to get rid of it. They were holding for their own downstream. We started to get some inquiries for concentrate a couple months ago. Actually just got a message over the weekend that now they're really starting to look for it. So we think smelters, maybe some of that Myanmar stuff has run out, and that'll be my little inside scoop to you guys and the listeners on that one, is that we started to get questions. Hey, do you guys have anything? And it is a hard one for traders to find. And if you're not involved in it, just because, you're talking about either really small producers or producers that fail due diligence. We had that one in the past month as well. Pretty bad.
Really?
To any aspiring miner out there, when a trader sends you a due diligence form, a lot of times there's like, these things are fairly standard. We customize ours, but there's like an OECD framework for it, right? And we ask for the location of the mine, and you put confidential in all caps. Like, that's the worst answer you could have.
Somewhere that we're not allowed to get it from.
Yeah, we're talking about some money in Colombia, not Alhico. I'll say that because I know, well, they're not public anymore, but it wasn't them. But it was in Colombia, which is it's a jurisdiction that doesn't traditionally mine tin, by the way. The geology is there. It's, Alhico is funny. I don't know if you guys are familiar with them, but they found out as well, and that their deposit is on the river that borders Venezuela. So, if you put confidential and you're telling me it's coming from Colombia, but I know geology a little bit enough to know that I may not be coming from Colombia, then anyway.
There's a lot of confidential things that have come out of Colombia historically.
That too. Anyway, so we didn't buy that material, but
you weren't part of the cocoa bean squeeze.
Look, if so, just send it over to me if you come across it.
Bentley, I'm keen to pick your brain because you're at that crossroads of hedge fund, commodity trader, and we were hearing a lot. It was probably just coming through the kind of Twitter echo chamber that these big funds are getting interested in tin at this. At the sort of levels. That was a couple months back now. And who knows, maybe that could be one or two people in a pod at, a Citadel or whatever. And then you can, kind of slap their name on it and make it sound like these big money managers are interested. But did you get any sort of whispers that, financial players with a bit of backing behind them would actually be interested in tin given the size of the tin market ultimately?
Yeah, that's a great question, actually. So I won't speak to Citadel. There's too many people in this building that
being from Chicago.
Yeah. There's a lot of them are still located here, even though they've moved to Miami. But actually, the one thing I will say is we've been involved in the LME for years now, and the great thing about the LME is, well, there's a lot of good things about it, but I guess the unique thing, I shouldn't say great, but the unique thing is there's still some of it that's done by phone. It's actually done by chat is what it is, not phone, but you can still do it by phone if you want, but it's done by chat. And you speak to the guys some mornings and they were like, no, you're actually one of two US customers we have. There's only, at that time, there's still only 8 ring members, and most of them are still either China or Europe or London. But I was like, wow, really? And in terms of like a fund, not in terms of hedgers, but I was like, oh, that's interesting. And he mentioned the other couple ones that are there. So there's actually just not a lot of interest from fundies using metals that are on the LME. And I know that the nickel market stuff happened, and so that they pop on and off pretty easily. They have big operations teams, so it's not hard for them to get access and then fade away and not use it anymore and that sort of thing. But I had heard some murmurs. I didn't hear anything huge. I remember there was a guy back 10 years ago or so in London, even longer than that now. He tried to squeeze the tin markets, and I'm sure a good squeeze is always cracks me up, right? So when has it ever worked, right? Well, it works a lot, except for it doesn't. It's like ask the Hunt brothers. You squeeze the market and then you got to sell it. There's no unrealized gains. Don't matter, man. Like realized gains are what matters. So that happened to that guy as well. This go around, I mean, I wasn't really a squeeze, but I think there's definitely fund money getting involved because you can see that there are open positions for certain dates that are larger than what was realistically able to be delivered. And look, the best way to try to call those people, I'm not trying to call them out, but the best way for traders to try to call them out would just like, squeeze them on the roll. So that's where you can see, depending on, a lot of them aren't that, most fundies get bothered. I got told a long time ago, I guess, by our brokers to be like, yeah, I'll let you do, it's called the Tom Next, but let you hold till then if you want. If you're not taking delivery, then I don't recommend it. It always ends in tears. And it's because there's only 8 ring members, right? So if there is when you read about it being a financial firm, it probably is. The ring members know. So that's what I'll say about that. And they will, if their broker's nice, they'll be like, do not let it get to this expo or else you will get squeezed. And it happens. You'll see.
What's a ring member?
So it's a unique, so you can only, trading has to be done either through a second tier or directly through a ring member on the LME. They're, what you think of in the pictures, right? Mm-hmm. But electronically, there's only 8 members, and that's the members you go through, and they have their own clearing now as well. That was the problem from the 86, going back to tin. That was the tin crisis of 86. It was kind of wild to think that in 1986, wasn't that they didn't have their own clearinghouse, it's that they had no clearing. So that we're all relying on each other to, it was like an NDF sort of thing in the currency markets, which is kind of my background. But you're relying on the others not to go bust. And that's what happened in 86 when the ITA sorry. Ooh, don't want to call those guys out. I like the ITA guys. It's what was before the ITA. Sorry. Yeah. They were trying to prop up prices. And then you had, Brazilians basically and other countries that weren't members producing up the ass and undercutting them, and they can no longer prop up prices. And then all of a sudden people are going bust left and right.
And that's what Mark Thompson speaks about in the sort of creation of the clearinghouses behind the LME, is that they just walked away with huge amounts of debts, right?
Yeah, massive. I don't remember who eventually paid for all that, but it was pretty large. And that, it's what happened in nickel. Like everybody, so the LME they used the London clearinghouse for a while. And now it's done their own thing. They have their own internal. And it's, without going on too much of a tangent, it is a bit to watch out for, especially in all these metals. When we talk about squeeze, a lot of times it might actually be you are effectively margin calling a producer that's trying to hedge. And there are ways around that. If you're a producer or a trader that's trying to hedge short, depending on your knowledge of the markets, you can make it so you don't get margin called. But look, instead of a margin call, you have to buy them back, right? It doesn't make a lot of sense because you're a producer. You're like, I can deliver in 6-9 months or whatever, because that's when I have it hedged out. And that's a lot of times what you actually end up seeing is that those players, the producers having to actually buy those hedges back. And what happened in nickel was it's like, well, I couldn't even actually deliver because it's a lot of MPI product. And look, Tsingshan did just fine. That's why I think that story is really overblown and actually misleading in my opinion. I know like the media loves a good story, right? But like a guy produces 600,000 tons a year, and rumors were he was short anywhere between 180 and 300,000 tons. So it's like, oh, okay, he did just fine. When prices got squeezed up, guess what? He's a private company, so don't have profits, but looking at all the expansion they've done and Badaroo and all that stuff that's around now, like I think he did just fine. The real problem is there's only 8 members, right? So that clearing pool, if you had prices go from 20,000 to, at one point in the night, it was over 100,000. Those little members, they couldn't, I don't want to call them little. Most of them are public companies and fairly big, but some of them are smaller. That's a hell of a margin call you have to come up with if you haven't, if you're on the short side of things. And that was actually what the fear was. It was the systemic risk from one of the, I've heard about 2 to 3 members were in serious trouble during the LME squeeze. And look, JP Morgan had most of Tsingshan's short. I don't think JP Morgan was in trouble. They can cover. That's the unique aspect of the LME, and that's where squeezes really, I guess, evolved from. Is you have all of that activity that happens behind the scenes. That's where volume comes from too.
There's one commodity which you might have a bit of insight into, far deeper than the usual person we talk to, because you just spent a month in China, and visiting some of the lithium refineries out that way. What was your takeaway, kind of, through May and June of this year, kind of visiting some of those facilities?
What is actually going on over there? You've seen it with your own eyes.
It's a big country, and they produce a shitload of lithium upstream and downstream. So I won't have the full answer, but I can talk a little bit about what I guess my experience was out there. We from our trading business, we went out there. We decided to launch a trading business. A lot of it wasn't for lithium purposes, and so I spoke with a lot of the bigger players, and was fortunate enough to visit a few of them as well. And one of the interesting aspects I didn't quite fully realize going in was a lot of the midstream and a little bit further downstream. So it's a interesting business. You can create, a lithium carbonate that's not necessarily battery grade, or, lithium hydroxide that you should be producing that's battery grade, but some of it does go into ceramics. The battery grade stuff, that is specialty stuff. And even the non-battery grade, it's just not really commoditized. It's very difficult. And these I guess refineries that got built and that are able to handle and produce it's not necessarily the highest grade, by the way. It has to do with like impurities and stuff for what these, the Cattles of the world and stuff want, BYD and Eve and all the battery makers. And Japanese and Koreans as well. They're big in the battery space too. They've set it up as spodumene as one of their main inputs, and a lot of it is economics too. So if you are, for example, one of our clients, they effectively are looking for 300,000+ tons of spodumene per year and about 5,000 tons of lithium carbonate. They can probably mix it, match a little bit more different, but if you use 7.54 divided by 330,000, I don't know why I just gave myself, that's a terrible number. 35,000 tons of lithium carbonate equivalent right there. Did I do that math right?
I think it's about 40.
Something like that. Okay, there, yeah.
Go 40. 40 on the dot of there.
Is Matty like secretly a math whiz over there?
Don't you worry about me, mate. I cooked me brain at uni. I was smart as fuck in year 12. Too much fun in King's Cross.
Well, there you go. Yeah, hey, that's just college or uni. American accent. I apologize, but I've been working on it. Like schedule is really hard. That's the proper way to say it, but we all say schedule over here.
Schedule.
Anyway, yeah. So they can extract more value out of spodumene, and spodumene tends to be a little bit easier to actually handle impurities like less chloride or boron and that sort of thing in the end product that comes through their refineries. So and I was speaking with some Europeans and stuff in the space as well after, and they kind of like sideways face, like, really? And I was like, yeah, it's really interesting. Like, look, spodumene demand is healthy. They want spod. And I saw some wild stuff, but the lepidolite is still going to keep coming from the integrated guys, just because what they can effectively do for them is it's not about making money on the lepidolite mine, right? Or lepidolite, sorry. It's about being able to sell that end product. And if you make up for it by your bigger margin when you're refining to a hydroxide or carbonate. And some of it's pretty extreme. I was at a facility where they actually import ore from Africa, and then they had a huge spodumene concentrator there in the middle of China. I was like, holy shit, there's no concentration, nothing happening in Africa. You're literally just, boom, ore on a ship all the way here. But it's an integrated facility. It's pretty wild.
Yeah. Yeah. Can you probably you alluded to it then, and that's the biggest, most opaque thing is the cost of production of lepidolite in China versus the actual benefit and purpose of it for the vertical integration. And you're sort of saying that the cost of production is irrelevant in a way because of the vertical integration, and they just want the end product for China, and China just don't care.
Correct. So when you had the inspections go down, it was beginning of this year, late last year in Sichuan, the guys that were really failing the inspections and stuff, that, that wasn't the Tianqi's the world, the Gunping's the world, anybody like that, right? That was independent mines. And they're just like, well, okay, now we have to actually adhere to these tailings rules, and that makes it so it's not profitable. So they basically shut down. The ones that are integrated, okay, they can adapt their tailing policy, even though it's it's still a shitload of tailings, but they can adapt those policies and stuff. And as you put it, exactly right on that. It's just that they make it up further downstream in the chain because they're vertically integrated, which isn't always the best strategy.
Yeah. So, and how many? Someone's told me before. What is the percentage of the lepidolite mines that are vertically integrated versus ones that aren't?
I don't have an exact number, but I would have to say at this point, it's got to be close to 100 at some point. Like you wouldn't be at this price. You're not. You got to have some sort of vertical integration, I think.
Yeah. Yeah. And so, and because the lithium coming out of Africa is a bit of a talking point at the moment as a disruption to the ones in West Australia, for instance, that are starting to really. It's only the incumbents in the lowest cost in the Q1 cost quartile that are probably going to survive sub 1,000 spodumene prices and the talk is that the supply out of Africa is a real worry for a lot of the ones that aren't in that first quartile. So do you see that as one of the biggest, not the biggest, but a big factor going forward in the global spodumene supply dynamic?
It's certainly it's a factor, but even in China, there are plenty of refiners that are like, I'll take some African stuff, but I prefer the Australian, the Brazilian, the more known stuff. We've had one of them tell me that. I was like, oh, it's good because African logistics is not my specialty. So kind of saved me some.
And is that based on a quality and impurity side of things? The fact that it's already concentrated when it gets to them instead of DSO out of Africa?
Yeah, I don't know how much of the ore stuff is I don't know if that was a unique aspect that I found or if that was more common than I realized. But I asked that question and he said it doesn't matter as much. They can figure out how to use it. It was more of just, hey, look, logistics are a pain in the ass there. And, our job as a trader is to make sure they get the material. I think he was kind of just hinting more for themselves. He was a commercial manager, right? So he's a procurement manager. He's like, well, I can't really trust on that stuff, but if you're going to purchase it, that's fine. It wasn't necessarily a quality thing, no.
Yeah. And so how do you view how do you look at the lithium price going forward? Like we've seen mania in lithium. It's obviously the opposite of mania now. But if you combine that Africa stuff, the shitload of lepidolite that China has access to, do you think there's going to be a bit of a ceiling on lithium, but just because there's so many options globally and we won't see a mania again, or do you think we might?
Oh, no, I've never seen that. I can't, putting a certainty on anything is never a good idea. But what I will say is...
It's easier when you say it and we don't. Like all the accountability's on you then.
Yeah. Sure, yeah, for sure. Oh, I'll take that. No problem. That's my job. No, I would never model in 80,000 carbonate in the foreseeable future, but or 8,000 spot. But with that said, I don't know what the cap would be in terms of the upside, just because, things can go way to the upside and be very profitable for, how mines are, right? They're not, you don't turn them on next year. Talking about multi-year process. In terms of a floor, I think we're near it. So I think just because of what the production that's needed and everything, even, I don't want to talk too much about DLE just because it's still speculative, but even with that crap, it's not crap. Some of it is, by the way. Got to be careful with what people say in that industry. But that part of the industry. But some of
you
it's
could say
legitimate, by the way.
DLE doesn't look exceptional at this stage.
Yeah, I think the anhydrous stuff. So what Sunresin does, there's another guy that's picking up on the DLEA. That looks like it's going to be something, but anyway. So in the spod side though, like not a lot of new, it's about new capacity moving forward. And it's those constraints and, inflation in anything in the world is, look, commodity prices go up. Not a common thing that people realize, but if you look over the past, just historically, they tend to go up on similar to the same appreciation of equities, by the way. It's actually a very similar thing on a price basis, right? So, 5.5%, 6% annualized over the past 100 plus years. If you really want to look at a long-term thing of it. So the reason for that a lot of times is just the cost of production and demand, right? So that's risen, right? I mean, you got Sayona that's out there. They're them with Piedmont and stuff, like they have those pricing, and it's like, okay, well, they're going to be struggling right now. But I think they'll survive. Stuff in Canada they got some quality assets out in that part of Canada, but the Aussies are obviously fine. Well, the ones that are, I was going to say, look, Pilbara is definitely fine. Greenbushes is fear of. It's fine. it's all right. I know that you get some like, well, what's your actual, financials on all that, because they have the 49, joint venture with Albemarle and stuff. But
there's a bit going on there.
They'll be fine. Yeah, exactly. I think the African stuff is going to run into shipping constraints as well. So it'll just all catch up. I think we'll see it, especially starting possibly as early as 25. We're going to start to see if it's like, all right, we need. I hate putting prices as a floor, because price can go underneath the floor for a substantial amount of time and substantially underneath that floor. But look, $800 is tough. US is tough to get under in spot. A lot of it does have to do as well with what are the margins. So what is a refiner's margin? So what is their cost of conversion, and where are the prices of carbonate and hydroxide? And those two do play off each other. And the last time, we've heard from it, like spodumene demand's decent. I know prices came off a lot here in the past month or so, but that was also happen to know that downstream guys were not buying at 1,300. They weren't okay with that at that point, but they're like, hey, get back down towards 1,000. Like, let's start doing some more. So I think, never know near term. Next couple of years, I can't really see it being much underneath 800 for the spot prices and SC6 basis, but that's just could change my mind tomorrow, I guess. But
yeah, it's funny when you talk about Pilbara Minerals as a obviously very well established, and we talk about companies that have torque to the commodity price, like, the Goldies might be on the smaller end that have big torque to the gold price. But Pilbara is such a big business, but it has so much torque to the lithium because their cost of product, they're not making massive margins on what the price is at the moment. But Jesus Christ, it has some torque on a big scale.
Yeah, I mean, Pilbara though, like, as I was telling, I think last night I was talking to Trev when things came out. That's just good execution. They've done a good job. Hey, this is what we're going to do. And they execute on it. And any sort of management like that, you just kind of buy into. And they're going to be impacted by price at the end of the day. But if you're going to make an investment in somebody and you trust in their management team, and then, okay, well, I know that if something goes right, at least I believe in this management team, right? Where sometimes price goes up because a big player in the industry really cocked up. It just doesn't, that's not a trend I see in Pilbara. So I don't think that would come from them. But I guess kind of heading back to you guys, what are you guys seeing a lot for, the others? I mentioned that I've spoken on the Tianqi side of Greenbushes. So I know a little bit about what's going on down there, and obviously Pilbara, but what about kind of the other players in the space? Or
the one to watch is Minres, I think. I don't imagine that they are making money on all of their mines like they say they are. I'd find it pretty
how's
hard
their,
to believe.
How's their automated what truck? What do they call them? What's a
Transhipper for
the trucks? That's for the iron ore.
Yeah.
Well, we'll see. We'll see. It's crunch time, but it is super interesting looking around, right? Because in WA alone, you've got Liontown meant to come online, Kathleen Valley, Mount Holland stuck inside of West Farmers in a JV with SQM. They're meant to be ramping at the moment.
We don't hear much about them because it's immaterial to West Farmers. They don't really disclose shitloads about it.
Yeah. Pilgangoora is getting bigger. MinRes want to expand production. Greenbush is dialed back, but they want to dial back up in the future. So despite the price being so, heading in the wrong direction, everyone's still talking about expanding, which is a bit counterintuitive.
MinRes is the interesting one, especially with Mount Marion, how they, I think it's what Gainfeng will want to do there, but a 50-50 JV. So, but MinRes could be losing money on the lithium operation, but they make a lot of money back from the mining services they provide to Ganfeng. So Ganfeng might be losing money, but MinRes might be breaking even or making money. So there's that whole dynamic that makes it very interesting. So it goes beyond the actual operation itself.
Then Ganfeng could be making money downstream.
Yeah, exactly. So I think between, as you said, you got Greenbushes, you got Pilgangoora, then Wodgina in terms of where everything's sitting in the on the cost curve. Then Mount Marion's beyond that because their spodumene concentrate's a lot lower grade.
Don't forget Mount Catlin too.
Mount Catlin, yeah. Well, they'd have to be under a lot of bloody stress.
Yeah, it's probably quite marginal at the moment. Yeah.
Yeah, so but then you got you had all the lithium mania, like all the other hopefuls that were looking to get going, like Develop did the scheme deal with Essential to buy Pioneer Dome, but it's like a narrow vein underground lithium mine, so you'd think that's probably really on the back burner of lithium mines that could come online. I'm not sure whether, and again, it's how you weigh that mine up against what's the arrangement with sending it up to Mount Marion or Bald Hill to get processed by MinRes. So it's whether how the creative accounting works on whether that gets the go ahead.
And they've been like JD said, everyone's still ramping production. They're all still dialing up production with the exception of what core lithium, right?
Yeah.
But everyone else is still dialing up production. So in that environment, it's just really, really hard to have a positive outlook on any of the developers to come into production when you've got a lot more supply still coming online, and then people have recalibrated their expectations on demand at the same time.
Well, you think like Pilgangora's dialing up from effectively what they were before, 680 going to 1,000, so they're bringing in 400,000 tonne a year of spot into the market, and then talking about possibly expanding to P2000. And what's worked for them before was getting the mine built, and then there's a bit of mania and they just bring in the chocolates for a short period, and that set that business up with so much cash, and they're probably like, right, that worked before, let's do it again, because it doesn't need to be mania for long for them to make an absolute bucket load, especially if they start producing above 1 million tonne of spod. Be phenomenal.
Bentley, from your time in China, how constructive were they around the ultimate demand for electric vehicles and batteries? How's the temperature around that kind of changed?
Yeah, so I think look, the EV demand is still there. It's still growing mid to high teens, but they do have consumers in China have the same, I guess, concerns with it as you guys would have in Australia, or we would have here in the States, where it's the range anxiety sort of thing, and also charging infrastructure combined with, a lot of people there do live in big cities, right? Just in Shenzhen, that's 25 million people, and they have the same problems that I would have, right? So I live in a high-rise building. How the hell am I going to charge my car at night, right? There's not a charging space for every single person in this building. And there probably won't ever be. Well, new buildings will probably be built with them, but this one won't, right? So there's multiple constraints that come to that, and they have the same thing. So plug-in hybrids has been picking up a lot in popularity, and brother-in-law just bought a new Li Shun, right, which is a Li Auto. That's a plug-in hybrid, and the thing to be careful too with the plugins is I can't speak to Li Auto on this necessarily, but a lot of them are still nickel hydride batteries. They're not lithium ion batteries. So that is actually a partial concern with the when you think about like the lithium battery demand, I guess, coming from that stuff. But they have so many EV brands and so many very successful companies there that are expanding outside of China as well and exporting that it'll still grow in the teens for years to come. It's just it'll have its ebbs and flows, more than just the cyclicality of what an automobile is, but also from look, there's the people that want to buy a car right now. They don't want a pure EV, or maybe they already have one, right? You can pick up a Hongguang Mini for, I don't know, equivalent of like $6,000. So like maybe you have that to like toot around the city, and then you have something else for longer distances. But so the story though hasn't changed in terms of then all of a sudden like downbeat on it, especially with export stuff, and they're growing a lot of capacity in neighboring countries. South America, BYD is doing something big in Brazil, in Eastern Europe, right? So Hungary's been a hot spot for battery capacity and companies too. So
yeah, I think they were building a BYD in Turkey as well, and obviously there's a lot of geopolitics that kind of plays into that. There was one more sort of group of metals that I was keen to touch on, and that's sort of on the back of you mentioning hybrids there, and that's PGMs. How have you sort of viewed this market? Obviously, it's been a tough place to kind of operate as a producer for quite a while, but what are you sort of seeing from your perspective?
Mate, it's so weird. The PGM trade seems like a consensus trade now. Like, you see it everywhere. Everyone talks about it, but
we're in a very niche part of the world, I think.
Is it consensus? I don't know. Let's go.
Maybe I'll take off my long now, I guess. No, I don't. That'd be a tough move to do with these prices, but I think part of that's going to be the supply side too, that people are pretty positive on it. It's not just the plug-in hybrids, but I would say the better question, shooting something back to you guys really quick. What have you guys heard about platinum versus palladium in this regard?
Yeah, a lot of people are favoring platinum versus palladium at the moment. That's definitely
okay.
I think it's hard to get the platinum dominant kind of exposure in the miners. That's what people go into the physicals and everything. But yeah.
I mean, it's just unless you like South Africa.
Yeah.
Escom has been Escom issues go back to my currency trading days too. So it's look, I favor platinum as well. I'll say that, but it's a very I'll say it too. It's a really interesting study on supply and demand dynamics and price. And we did a bunch of research on this several years ago, where, believe it or not, but I'm going to call it supply and demand because it's what you can see, and that's part of the issue in itself, but doesn't correlate that strongly to prices. It's the bigger correlation actually happens to be with the demand side versus recent trend growth. Just what we found, right? And a great example of that last year, there's not really, I can't even think of a better example of this, was palladium, right? Palladium was in a massive deficit last year, really big. And, I remember 2 years ago now, prices were pushing 3,000. We were below 900 a couple of days ago. So it's a hell of a move for a market to be quasi in a deficit. And, look, so stockpiling that went on with auto companies with fears of Russia, because palladium is much more Norilsk, right? Even Norilsk facilities in Finland. But I don't know if anybody's noticed this, but one of the only metals to not be sanctioned by the U.S. is palladium. So
I did not know that.
Very political.
Yeah, I did not know that.
whatever's convenient to them, they decide to do. Uh, so, watch out for that though. I mean, the UK last year, at the end of the year, they did some stuff against like trading for it and Russian palladium, and that did cause some issues. But because the LBMA, so you have the LBMA and the Swiss trade, there's a little bit of palladium involved, but look, platinum and palladium are also, you're not taking a platinum ingot and using it into a catalytic converter. You can, I believe I've read that you can actually do it, but typically it'd be more of like a sponge product that you would use. But I prefer platinum as well. Kind of more getting on that too. That just has to do with the latest models of cars. They switched to using more platinum, because platinum used to be a diesel catalyst, and now it's being used in petrol. So the hybrids are typically petrol. I don't know how many plug-in hybrid diesels, especially after Volkswagen's minor issue.
Very, very minor.
What was that one?
Yeah,
that was their emissions cheating scandal.
Yeah.
So when you say you're long there, Bentley, in this case, are you talking purely about the metal because the producers are, just tough and riddled with risk, or how do you sort of expose yourself to it?
Yeah. So our trading business, I try to get a little bit involved. That's going to be tough. We don't. So I'll say in trading world, have nothing there. But hedge fund space, yeah. Look, I hope physical platinum. Feel fairly all right about that, and I'll hedge against it and do different things that you can do in the derivatives market to where it's not just a pure levered exposure of some sort. But
how do you hedge it out of curiosity?
So precious metals are against the dollar. They're more, how do I explain it? Due to their supply, there's a lending leasing market to it, so that they act a lot with interest rates. So you really wanted to, you didn't feel comfortable at price over the next month or two, you could literally sell forward and collect like an interest rate, just like a contango market essentially. Or we just use options in the derivatives market as well, and we'll do that and just take advantage of, hey, prices rallied a bunch. It's part of our portfolio management. It's like, all right, prices rallied a bunch. You can either take stuff off the table, but if you hold physical, it's a little bit more difficult. Or you just go in and you can structure an options position that takes advantage of the downside, and then a hedge. We don't like to look at a hedge as just like a static thing. I'm going to buy a put, right? And whenever it expires, wherever price is, it's if price gets to a certain point, I'm just like, well, screw it. Why don't I just take profits on the hedge, and no matter what, I will always be beating the price in the market, right? So as long as you do that, but if you let a hedge expire worthless, then it's not the case. So that's typically what we'll do with those sorts of things, and we'll do that kind of across all different metals. And then in the mining space, we dabble a little bit in Zimplats. It's a nominally liquid equity.
I don't own it. I've thought about it. I keep looking at it. The dividend yield's amazing. Zimbabwe only exposure. But
yeah, that was our reasoning for it too. Is maybe we were just scarred by Rand trading back in the day, but it was it was like, okay, well, I can kind of avoid it a little bit by being in Zimbabwe. And the other interesting aspect to it too, where we looked at it and started doing it right after this, was they started to and Sube, which is their finance minister, so when he created their new currency, 2019, I think 2018, some of those 2 years, that was didn't work. Worked about as well as the one before, in all honesty. And then, but their new scheme is, because they're very much in Zimbabwe, your currencies that you typically would find are dollars, euros, yen. It's kind of what you transact in, right? Rand as well, sorry. So their new one is actually tied to the precious metals they mine. So I found that pretty interesting. It's like, oh, all right. Zimplats could benefit maybe a little bit from that. So I felt a little bit comfortable having something small. Again, he trades like 50,000 shares a day or something crazy like that. So you can't put size.
Yeah. I think
what is it? You guys know. It was like the reason why it even still exists on the ASX is
there was a minority holdout back in the, I want to say early 2000s, when Impala Platinum tried to acquire it. And so the minority holdout basically just ensure that it retains this ASX listing, but it's only like a bit over 10% of the company. I can't remember, it's like 13% of the company, something like that. That's actually that actually trades on the ASX. The rest is just owned by Impala, and I'm sure at one point, Implats will want to wrap that up, but it's just, I actually think the founder of Zimplats is one of the holdout shareholders, and he's in his like late 80s. This guy called Peter van der Spy, and a bunch of his friends and stuff like that have just killed it. But yeah.
Is there a lot of miners like located that operate in Africa but located in Perth still?
Yeah, lots of like African miners are based out of Perth. Yeah, just for one reason or another. A lot of Perth people find themselves going to Africa to seek value or whatnot, and some good stories, some bad stories. There's not really many stories in between.
A good amount of South African people moved to Australia as well, sort of in that time.
Okay.
Perth being relatively close. There was one other aspect of the PGM market that I was keen to get your thoughts on, sort of speaking to Trav's point of, maybe it's becoming more mainstream, but we saw the ETFs, I think they were NYSE listed ones, had record inflows in Q2 of this calendar year. So ETFs track holding physical palladium and platinum. Is that something you'd picked up on?
I had not. No, I had not picked up on that. I used to follow it closer than I do now. No, I can't. I don't have much color on that. I'm going to be honest. I didn't see that note.
Record levels is in quotation marks because it's from a very low base. So some of these are just tiny ETFs, but
it's not like silver and gold have pretty big ETFs. Platinum and palladium, as far as I'm concerned, there's not a huge amount of physical trusts. I think there's maybe
they're tiny.
One, but okay.
Yeah.
No, I didn't see that.
Beautiful, Bentley. I think we've exhausted my list of questions, and I'm much the wiser in the commodity trading side of things. So appreciate you coming on and making the time for us.
Bloody interesting, mate. We'll get you on next time for uranium.
Okay. Yeah. Yeah. Well, we'll see where prices are at that point. It's you look uranium. Yeah, we'll save that. We'll save that one for later. Probably a good thing. I didn't really want to get triggered by things like next gen, but
I will ask you quickly, but before we finish, the fact that the spot has just stopped trading and this fucking long-term outlook that everyone's got, which would indicate to me you wouldn't think too many people would want to sell physical that they have if they have this long-term outlook. So if something's not being traded and not many people want to sell it, what's going to happen when people want to start buying it again? Do you think there's more upside potential than downside potential for that thinly traded spot market?
So it's really interesting when you look back at 2013, 2012, Goldman wanted to effectively get rid of so they had a lot of uranium, right? And they had physical, and they're like, I kind of just want to get rid of this. And they held on to it. I don't know, but it's probably not the full story there. It's obviously not the full story, but so they were actually the ones that held a lot for fund people. Now, I don't do business with Goldman Sachs. It's not, I think they do what they say they're going to do. They do really good at their reputation. And that's why, it's just kind of a competitor, I guess, in a way. So I don't have a ton of insight of what they've done with that uranium and who holds it at this point. I do know, as we pointed out, some of these, even miners, right, like the best of the mines, I know hold some too. And you have the Sprotts Uranium Trust. And what you could end up seeing is, so technically a trust like that, a closed-end fund, it's kind of like an equity. So you have to, if somebody comes in levered, they could technically, Sprotts is huge. It probably wouldn't happen, but they can come in levered, buy enough shares in the Sprotts ETF, and then vote and force. You could basically activist and force them to sell, and that's probably the only way they would do it. I don't know why. I'm not a huge fan of these physical trusts for that reason. Where it's like, what's the point? You got to get some sort of cash flows at some point, right? People buying physical, sure, yeah. Look, people chase all the time. So if you see uranium going up towards 120 again in the spot market, I can almost guarantee there's going to be some people that come and chase. Now, is there enough? out there and enough people out there that are willing to sell? That'd be the question. And then at what point do some of these miners catch on to all that? And they're just like, F this, we're going to deliver against that stuff if they can. A lot of them can't because of their long-term pricing mechanisms and just the way that market is. It's funky that it has a spot market like that, but I mean, people can hold physical. I find that odd, but I mean, it's not enriched, right? So if there's that as well, but yeah, it'll be interesting to see that. It's just, I don't remember who you guys had on the other day. I was talking about legislation being put in place, and it's
Warren Oehlman saying the DOE with a stroke of a pen could essentially not force majeure or whatever the word is to say, no, you have to sell those.
Maybe because you guys remember a while back they tried to do a physical copper trust, and they actually the downstream players and fabricators and stuff took them to court. I think it was, I don't remember who it was. I don't want to say which bank it was because I don't want to get it wrong, but it was someone was trying to do it, right? A couple people were, and they never went through the courts. I don't believe. I think they just dropped it and didn't end up doing the copper trust at that point. Now there is one. Spots has one, but so I don't believe there's a precedent there. I'm not a lawyer. I don't like reading about that stuff, but that would be an interesting situation to get in. And I'm well aware that Matty holds the physical uranium trust at some point.
Ding. Smart for me.
Look, I mean, if drives prices higher, right? We're at about 82 and a half right now, something like that.
It's very interesting. I think Spot's trading at nearly 15% discount to NAV as of last night. So it's all very quiet at the moment.
That's a lot of carry. There's got to be hedge funds in there. Well, no, there's not really easy to do. Like the futures market's not very liquid, so I don't know how somebody's probably doing it though. It's cool.
I'm sure they've looked.
Sensational, mate. That was friggin' awesome. Thanks for love talking to people across the ditch, connecting us to other continents. Love it.
Yeah, it's great to talk, guys. It's been a lot of fun.
Oh, there we go, JD. Right in your wheelhouse, that one. I love those chats.
Mate, that was fascinating. And another person I'd never heard about until very recently. It's awesome. These people are just happy to come on the show and share their wisdom with us.
I can't believe they listened to it before. It's so flattering, isn't it?
That truly blows my mind.
Who would have thought people would be listening to what you have to say a year ago, JD?
Who would have
thought? Your face would be attached to it.
Yeah, but apparently we're more entertaining than the talking heads on CNBC.
What a legend. Good on you, Bentus. You bloody legend, mate. And another legend, Axis Mining Technology.
Absolutely.
Our bloody cornerstone legend drill hole survey.
Trusted partners.
Jesus Christ, they're trustworthy. Mate, in the show we had MMS as well with GetWet.
Who else we got? We got VRIFY, Matty.
Oh, we do. We got DSI Underground, Silverstone.
WA Waterbores.
Oh, Gero James.
James.
CRE Insurance.
K-Drill.
Oh, and bloody a good old spark chart every now and then doesn't hurt anyone.
You spark.
Ooh, hooroo, money miners.
Have a good weekend and go Australia.
The information contained in this episode of Money of Mine is of general nature only and does not take into account the objectives, financial situation or needs of any particular person. Before making any investment decision, you should consult with your financial advisor and consider how appropriate the advice is to your objectives, financial situation and needs.